Should be good to go.
This meeting is being recorded.
Got it. All right. Well, my name is Chris Quolke, and I'm ACEnet's business coach, researcher, and trainer. And I have the pleasure of talking with you all today about access to capital opportunities. So I always like to give people an overview of where we're going to go together. And when I think about accessing capital for agribusinesses, I oftentimes think of it kind of in three contexts. There's traditional capital examples that oftentimes people know about, but maybe they don't know the details of what exactly they need to do to approach it or to identify it. And then there's a variety of non-traditional access to capital opportunities that folks may or may not have heard about or run into in the past. Also want to talk about just some grant writing best practices, acknowledging that for a lot of agribusinesses, grants are an opportunity to inject additional capital into your business to grow what you can do, to allow you to approach a bigger market or to produce more of the agricultural product or commodity that you do produce. And then lastly, I want to talk about a few other kind of miscellaneous opportunities that I think could have value and potential to be of assistance. One of them being the current agricultural use value. So with that, I'm just going to kick off and talk a little bit about loans because I think they're one of the most common methods to access capital associated with your business. And typically they're administered by three common organizational types: banks, credit unions, and community development financial institutions. CDFIs are probably a new one to a lot of folks, but they do some of the most innovative loan packaging of any of the other providers that we'll talk about today. But every institution has their funding priorities and a tolerance for risk in what they're funding, and that's all based on the application that entrepreneurs put forward. So we often recommend that institutions you already bank with or have an existing relationship with are going to provide you better rates and terms. And it's a really good idea to shop around if you're looking at a 15 to 20 plus year commitment to ensure that you're getting the best financial vehicle to grow your business consistent with your vision for your business. Loans are repaid to the institution according to those terms and conditions, which is why the interest rate and the life of the loan are two things that really matter when you're approaching entities for loan packages. Now, one of the things that oftentimes when we're working with clients in ACEnet we run into is to get to the actual banker, a lot of time you have to have a business plan completed. So I do have included in here a link to some business planning documents that can be helpful just to start from wherever you're at in your business planning and business administration. Another typical expectation that most financiers have is there's a percentage of the total project that the owner has injected or shown through a budget to be injected into the business activity. And that can range anything from 5% to 15%, depending on the institution and the life of the loan. So that rolls right into my next piece is what are the terms and conditions of the loan? How many years will you be paying it back? And then what is the interest rate that can be offered to you from that financier? It really is a good practice to shop around a little bit for the best rate, terms, and owner contributions based on what makes sense for your business. Not all access to capital loans are going to be the best vehicle. In fact, for some businesses, loans are not the best vehicle at all because it involves taking on liability. So if for your business, the monthly overhead liability component is something that may be a challenge to reconcile, there are some other forms of capital that exist. And these ones are actually provided by the federal government. So it's a very different form of loan-based capital yet, but they're actually provided by the USDA, Rural Development, and the Small Business Administration. I love using hyperlinks when I'm writing PowerPoints, so you all will get a copy of these, and all of these links direct to the resources that I'll talk about a little bit. In fact, we may click on a few together. So the first one is the Farm Service Agency through the USDA. They have a plethora of financial loan programs available to agribusiness owners and operators. And each of these have their own kind of pitfalls or reasons maybe to explore. Microloans in particular, I will be talking about a little bit later on in the presentation because they're a specialized form of loan vehicle, usually for sums of money less than $50,000 in total. But each of these programs really is set up to focus on a particular type of funding to allow that operator to recover the loan and the debt servicing of that loan within their existing business activity. The rural development programs are very interesting to me as a nonprofit employee. ACEnet is a nonprofit business incubator, and several of the programs definitely have relevance for community, like municipal organizations, but also for entrepreneurs. The Business and Industry Guaranteed Loan Program through rural development is a strong opportunity, similar to many of the Farm Service Agency grants. I will say that for a lot of agribusiness operators, the USDA Farm Service Agency is going to be a better fit with your business than some of the SBA microloan or 7A loans. But depending on what's going on or what your desired goals are with your business, there can be reasons why those may be a better fit depending on the total volume of funding or what you're looking to do within that. And I'd be remiss if I didn't mention the Small Business Administration, who serves many entrepreneurs nationally. Their microloan program is also typically less than $50,000, and their 7A loan program is also exceedingly popular for a lot of the more SBA business loans that they make. So, still in the realm of traditional capital, it's something that a lot of folks are aware of is foundation and philanthropy grant opportunities. It's a non-recoverable form of capital that's made available to businesses. Foundations and philanthropy fund according to their mission statement and values. So when thinking about these as a possible opportunity, you really have to take into consideration the values that your business is working on. Those could be things like sustainable agricultural practices or humane processing. But whatever the values of your business are, oftentimes a lot of foundation and philanthropy, when there's alignment, that's really what they want to see. Now, it can be difficult to identify foundation and philanthropy grants, but the effort is totally worth it because there's an opportunity to receive unrestricted operating funds directly injected into your business. Usually there is an expectation that there's some kind of activity taken in exchange for that, but occasionally it can be simple things like marketing or cross-marketing opportunities. I am going to talk about a couple of good resources to identify foundation and philanthropy grants, but specific to Southeastern Ohio, I definitely want to give a shout out to Ohio's Winding Road and their seed grant program. It's an opportunity to get around $750. It's a spectrum from $300 up to about $800 that directly allows you to market your business to increase tourism and visits to Southeastern Ohio. Those applications typically launch in the winter with funding decisions coming out in early spring. But yeah, the traditional capital, foundation, and philanthropy can be a little bit of a challenge, but there are some really strong agribusiness funders that have found this space in the last decade, and I do want to highlight them here when we get into some of the resources near the end. So, grants. Federal grants in particular. I think these are the ones that are some of the strongest funding opportunities for agribusinesses, and really the United States Department of Agriculture leads the way with a few of their grant programs. So a lot of these are housed under the Agricultural Marketing Services website, which is hyperlinked in as the top link here. And they have a range of grants and loans depending on the activities you want to engage in on your farm, whether that's dairy activities, meat, livestock raising, specialty crops. Each of those have a funding opportunity. One of the caveats is the specialty crop block grants are actually made out to State Department of Agriculture's. So the state ODA specialty crop program is actually funded through the federal one. But the ODA website does have information about that. As I work with livestock producers, The meat and poultry inspection readiness grant, if you're thinking about on-site processing or moving some of your expense into processing activities, that can definitely be a powerful pathway to do that. And then the farmers market and local food promotion programs each have a plethora of outcomes that could be beneficial depending on what agricultural products you would like to produce or to grow the marketing associated with to get them into markets or consumers' hands. But I think probably one of my personal favorite grants is the value-added producer grant, or the VAPG. There is not a current funding cycle up for it, but there are 2 iterations of it when the next funding cycle comes up. The first one is a planning grant, and that's limited to $75,000, but that enables you, the entrepreneur, to complete a feasibility study on your property to really follow through. What do we need to do to grow this product, to produce it, and then to get it in front of a market? And this $75,000 can pay your time, it can pay contractor time, and it's limited to 1 year. But oftentimes that $75,000 helps entrepreneurs to determine whether or not a business idea truly is a good idea. And if your research then shows it to be, that can be justification to submit for the working capital grant, which is limited at $250,000. So I really like this cycle of applied research followed by taking that research and rolling it up into a working capital grant. And that's why I love the value-added producer grant so much. But it likely will be coming online in February and then due April or May. And then rural business development grants are another good one to be aware of as they post. And I'll click on this guy. You see it's coming along. So this one has closed, but this is another opportunity to continue to grow community skill sets, to also seek additional partners possibly to grow your program, or I'm sorry, your business idea. Did we come back up right? Yes, we did. So yeah, more traditional capital there. And then into some of the non-traditional capital funding opportunities. So crowdfunding is a relatively new form of access to capital, and it's sourced from many small donors, usually via social media. There's a range of platforms seeking crowdfunding, with some specializing in a particular kind of business, service, or good. Some of these platforms take a different percentage or only deliver the funds if a threshold is achieved. I have a couple of tips just to think about for maximizing crowdfunding opportunities. One of the #1 findings is people love high quality video and images to help tell the story associated with why people should contribute to your business. Connecting how their contribution drives your business forward, one step closer to success, is another thing that it seems like successful campaigns do. And then lastly, continuing to share updates with crowdfunders. These folks have indicated an interest in your business, so they could be suitable to invite to follow your social media page, or start to develop quarterly newsletters to share the updates of your business and when you'll be appearing places or having products appear in markets. So this is a rack card ACEnet had prepared a number of years ago, but it does a good job of kind of breaking down some of the differences between 3 common crowdfunding platforms: Kickstarter, Indiegogo, and GoFundMe. So as you can see, Kickstarter is an all or nothing crowdfunding platform where if you don't hit your threshold, you don't receive any of the funds. They also have a different structure with respect to the fees that they take off based on where they may have come from. But it is very popular. So that's the trade-off with any of these, is there might be popularity around the platform, but some of the particulars of how they structure their transactions or the all or nothing or flexible funding might make it a barrier. Indiegogo allows you to do both all or nothing or flexible funding, but you can see increased platform fees and a 60-day time limit to reach your funding goal. Lastly, in this brief example, is GoFundMe. They have flexible funding, so if the goal isn't reached, you still get to keep whatever is raised. They have no platform fees, but 2.9% transaction fees with 30 cents per transaction and no timeline. So again, each of these may be a good fit, but really figuring out what for your business and the need that you're identifying makes the most sense. So microfinance is a form of capital that has smaller loan packages associated with it. But I found that this particular program in Athens County, operated by the Athens County Economic Development Council, is very, very powerful for a lot of entrepreneurs who are in that $10,000 to $50,000 price area. Programs like this are operated in many of the counties that I've checked into around the state of Ohio. Typically, either a micro loan fund or a revolving loan fund are what they are oftentimes marketed as. But they fund between $10,000 and $50,000 and has a pretty healthy list of eligible projects, including land, fixed assets, building and facilities, machinery and equipment, and infrastructure investment directly related to the business or industry. They're wanting to fund newer expanding businesses owned locally or even outside, as long as the facility is in Athens County and they're open to any form of technology. And then the program requirements is the loan cannot exceed $50,000 in total volume, and then 5% of the total project cost has to come from the owner. So for $2,500, you can unlock up to $50,000 if your business is in Athens County. And for a lot of entrepreneurs, programs like this help them to see how they could draw down bigger pools of money to make an enhancement that allows them to then do more. Similar but different, Athens County also has a revolving loan fund. Significantly higher top of the end, so up to $500,000, but very similar in what they're looking for. They want to see job creation for every $25,000 of project expense. They still have the 5% equity injection, and then 15% of the project's fixed costs must be privately financed. So that's how they're able to defray some of their risk, is by involving another financier into this to ensure that for the bigger sum of money, there's more entities involved. But programs like this exist, again, in many of the counties I've checked into around the state of Ohio, as folks reach out trying to figure out how they can get a little bit of funds to do more. So also want to talk about some of the targeted funds for grants and loans. This is a relatively new non-traditional form of capital that is out there. But the USDA and several other federal agencies have identified targeted farm loan funding for underserved groups and beginning farmers. And they have some specific language about who exactly qualifies for some of these programs. But suffice to say, it is an outstanding opportunity to receive additional technical assistance and possibly some additional loan packages. So I do highly encourage you all, if you feel like this would be a fit for you, to definitely pursue some of these targeted loan funding opportunities, because they're out there and they're available for folks. Okay, so I want to just briefly cover some grant and loan writing best practices. I think the first one is to make sure that you've reviewed everything related to the grant you're considering. I find the webinars that they often host associated with either loans or grants are highly informative and usually informed by folks who've struggled in the past. If they have a listing of successful applications, that can also be a strong way to ensure that you're leading with what's been successful in the past. Following the guidelines is not so much a struggle for folks, but completely answering the questions can sometimes be a little bit of a hurdle. Just ensuring that you've really addressed the why in every single question for why this matters for your business and how it's going to help move you forward. One area where I've definitely seen people struggle a little bit, especially with some of the deadlines that approach quickly, is collecting quotes and bids. While many sales entities do their best to return timely quotes and bids, definitely in rural markets, some service vendors can move a little bit slower. And I know in Athens in particular, depending on what folks need a quote on, sometimes it can take up to 30 days, unfortunately. usually encourage folks to assemble the application materials in a word processor, either Microsoft Word or Google Docs, whatever works good for you, but using track changes to complete edits in the application materials, and then also, using it in that shareable place to send to a trusted editor, someone who has some experience or has, good copy instinct for reviewing the written word. That can also be a good place to get your character and word counts together independent of the online form. A lot of those can time out within 15 minutes to 30 minutes of inactivity. And then I every time save everything I'm touching as a PDF just to lock it in its current digital format as I last saw it. So anything I'm sending in for submission, I'll have my own personal folder where everything's saved as a PDF. And then, as I said a little bit earlier, a lot of loan applications are going to require a business plan. And we have some resources in the link a little bit earlier. But before I save these as a PDF, I'll also relink it right here, just so it's in one place. So a couple of other forms of financial support and some other non-traditional programs that exist. One is the current agricultural use value. And this is an opportunity for landowners to decrease your tax obligations. You have to work in conjunction with and get some information from your county soil and water conservation districts. But here in the hyperlink, I've included some notes I prepared for a client who was interested in CAUV, and they struggled to identify some other opportunities to get that. So definitely, if you're interested in that, feel free to browse those links. And then individual development accounts are also called IDA accounts. It's a specialized savings account that some nonprofits in our Southeastern Ohio region are looking to develop, where a client deposits a set amount of money into an account. They receive technical assistance, create their business if it's not already done so, and then they have between $2,000 and $2,250 added into that account. So they're able to then access about $2,500 through participating and injecting $250 into this account. It may not be a good fit for everybody because participants have to be at 200% of the poverty level. For Athens County, that's about $24,000 of earnings, not taking into consideration real estate and one vehicle. But as I said, that technical assistance in terms of how to manage the money, and then also the matching, the dropping of $2,250 or thereabouts on top of that, that creates a rolling pool of money that the entrepreneur can use however they want to grow their business then. That money could even serve as the 5% into a revolving loan fund. So this program could enable someone who theoretically is at 200% of the poverty level to receive $2,250 and then access a loan where that is the 5% volume. All right. A couple of other forms that I want to mention. So I'm going to come back for the comprehensive link in a moment, but agribusiness sector specific groups are a fantastic way to stay abreast of what's happening and if there are exciting new funding opportunities. My example is the Niche Meat Processing Assistance Network, NMPAN. It's administered through Oregon State University, and they just have everything and anything I've been looking for with respect to meat processing and meat processing support services. They're also really into mobile processing, which is a personal interest of mine. But they have been a fantastic resource as funding gets announced. They're really quick to share about it. And then they also have a pretty good internal technical assistance network. When processors run into a question, they'll turn to this group to ask questions out to get answers. Problem with groups like this is I would say on an average day, there's anywhere from 8 to 12 emails that come across the listserv, but it's such good information that I just set up a filter so I can keep on it as it comes through. The comprehensive funding for food businesses PDF from Michigan State University is an amazing resource. Stumbled across it a few years ago, and they've continued to update it annually. So I'm going to open up the link here in a second, but it has lots of high quality information on grants. Additional examples of crowdfunding platforms and considerations for some of those, as well as then foundation and private philanthropy listings. So I'm just going to make sure that pulls up right. Yep. And this PDF is produced by Michigan State University, their Center for Regional Food Systems. And it's broken out really nicely with many crowdfunding examples provided. They have some accelerator resources as well. But then in the miscellaneous resources section, that's where I was saying you can identify a fair number of philanthropy and private foundation opportunities. They also then have some of the federal programs that I was discussing as well, listed out with who they fund, what their priorities are, and kind of how to access it. So this resource is one that, again, only found it in the last year or so, but it has been invaluable in terms of talking with folks about opportunities for them to access some capital to grow their business, depending on what their agricultural activity is. All right. So with that, I have speed spoken through my content, but I wanted to make sure we had time if there were questions or anything that I could do to be of assistance as you're considering accessing any of these forms of capital, or if you just broadly have questions, I'm here for it.
I'm not in Ohio, so it doesn't apply to me, but I did have a question about the 200% of the poverty level for that one source of funding. I don't imagine that I'm in that realm, but the next part of it said not including real estate and not including a single car. So what does that mean? What does that mean? Where's the threshold for this?
Yeah, so that program is one that hasn't been rolled out here yet, but the hope is it will be in the next 2 to 4 months. And they want to not penalize people who have property or a single vehicle. So it's really your gross revenues, essentially. What are you earning in the forms of a W-2 or a 1099 to make that determination, as I understand it.
So it wouldn't be I make X amount of money and then I take my mortgage out and I take my car payment out and then that's where I am. It's everything.
I do believe it is everything. Yeah.
Okay. Thanks. I don't know if it's around me anyway, but I just wondered how that worked. Thanks.
Yeah, absolutely. A lot of those programs that use the percentage of the federal poverty remind me that I did not get a great statistics education in K-12. So then I have to sit down and like work it out and be like, well, how much money is that actually looking like to be eligible? And then how does that affect everything? Great question. Thank you for that. Well, hearing there aren't any, that's okay. I don't need to keep folks longer, but I am here if anybody has a question. You can use the chat to get at me. Happy to speak to things, question or that folks may have questions about.
I actually just thought of a question, Chris. Have you ever had any or heard of anyone or helped anyone combine any of the like grants that you mentioned with the Ohio Housing Finance Agency assistance that is provided to like first-time home buyers in Ohio?
I haven't, but I am furiously scribbling a note because I'm very interested in how to pair together some of the housing specific funding through the state with some of the other entrepreneurship activities that ACEnet and others engage in. Can you say that for me one more time? The Ohio Housing Financial Assistance?
Ohio Housing Financing Agency.
Financing, thank you.
Yeah. I'm like just starting to dive into this whole like realm of searching for grants and stuff because I do want to like buy farmland with a home in the spring. And so I had been talking to the Ohio Housing Financing Agency, as well as like my local Washington County FSA office. And what the Ohio Housing Financing Agency office had told me is that they would work with other like loan and grant programs as long as it was a lien where the other funding grant loan source was the primary lien holder. So I'm still like digging more into that, but I was just curious if you had any info on it.
So I haven't specifically worked with a client who's done that, but I know some of our clients who've expanded into their own facilities. This is ringing a bell for me. So Caroline, I definitely have your name jotted down because I will follow up with some of our staff who've worked on that with them just to learn a little bit more and then see if there's anything there. Yeah.
You use the acronym CDFI, Community Derived Funding. What was that acronym?
Community Development Financial Institution. Yeah. In the state of Ohio, ECDI, since I realized I still have my screen up, ECDI is one of the statewide CDFIs that serve throughout our region. They also have some of the SBA loan program opportunities, so they're able to facilitate the 7A program. But they are one of the CDFIs in the state that we point to as an example.
And I put this in the chat, but everyone will be getting a copy of the presentation and the recording after this, so you can look back at it.
And all my content's hyperlink heavy, so you definitely will probably have a good bit of additional information in there, but happy to process in the future any questions you might have, or if there's a thing where you're like, how could I make this work for me? That is one of the things we do with clients.
Thank you.
Thank you.
Okay, I'm not hearing any more questions. I think we're good to end it early. Thank you, Chris.
Thank you all very much.